Good morning, Bitcoiners. Hello, and welcome back once again to your Bitcoin economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm your host, Mauricio Di Bartolomeo, co-founder of Ledn, and today is Tuesday, April 5th. We have a very special episode for you this week. In today's issue, we're going to start by talking about the biggest Bitcoin conference in Bitcoin's history, which kicks off in Miami this week. We're going to have our Ledn team down in full force, along with our CEO, Adam, participating on a panel about the Bitcoin mortgage. More details ahead. We're also going to look at the big banks in the US, which are getting more and more active in crypto. We're going to look at a few of the most recent developments and where that trend might be headed. And then we're also going to look at, in the blog version of today's issue, at central banks who are now discussing more and more decentralized finance and stablecoins, particularly an announcement out of the UK that stated that they are looking to make stablecoins legal payment forms as part of their new regulation. So lots of interesting things to cover this week. Grab your coffees. It's going to be a great one. And starting as we usually do with Bitcoin, we have seen that over the last 2 weeks, Bitcoin has actually held ground after that big rally from mid-March until the 28th of March. Bitcoin's currently trading at around $45,800, and it has come down again approximately 2% over the last week and so far into the trading week this week, 2 days into the trading session. As we mentioned in the headline, there's a lot happening for Bitcoin this week. One of the main things happening this week is Bitcoin's largest annual conference, which kicks off in Miami. And this is the website for that event. Again, stating that it starts from the 6th to the 9th. The Ledn team will be down in full force. We have 16 representatives of the team down there manning a beautiful booth, so be sure to come check us out. Unfortunately, I won't be able to make this trip as I have to stay back as our family is getting bigger, and so I will be catching you on the very next conference, but this time you'll get to meet 16 of our amazing team members down there, and Adam will be participating on a panel. We're going to break down those details shortly. So come say hi, stop by our booth. If you're going to be at the conference, we would love to get in touch. So now, in addition to our presence in the conference and inviting you all to come hang out with us at our booth, big conferences are usually accompanied by big announcements and sometimes big surprises. This is the headline that was published by Forbes over the weekend, saying that big surprises could be, ahead as Bitcoin is setting up for one of its biggest weeks ever. And again, as we saw, last year's Bitcoin conference brought us the announcement of Bitcoin City from El Salvador. So this year could also have the potential of having similar announcements that could move markets. So again, interesting to consider. Now, going back to the week, this week could be a big week for Bitcoin for several reasons. One, as we mentioned, there could be potential product investments or partnership announcements from the conference. There will be a lot of big personalities taking the stage at Miami, and as we've learned from the last conferences, anything can happen when people are on stage, potentially from an announcement standpoint. The second thing we're looking at this week is the Luna Foundation Guard, which seems to continue with its plan to accumulate up to $3 billion worth of Bitcoin. That's the immediate green light that they have been given to purchase $3 billion worth of Bitcoin. They have an overall goal that they have stated of acquiring up to $10 billion worth of Bitcoin. But right now, we know that they have the green light to go up to 3 and that they've only purchased 1.3 billion. So this seems to be one of the things, or one of the reasons behind a sustained bid in the price of Bitcoin as of recently. Now, the third one is we're starting to see some large institutional players from traditional finance continuing to get more and more active in crypto. Last week, it was Galaxy Digital and Goldman Sachs. This week, the news came courtesy of Citigroup. So to give you the context, let's just pop up this headline, and this was the just gonna put the Citibank announcement here. So Citibank, again, last week, Zero Hedge published an allegedly leaked report out of Citibank, and this is a snapshot of what was included in that report. And allegedly, this report was titled "How to Value Bitcoin," and the report included a 12-month price target ranging from 26,000 to 121,000. Now, while this report is yet to be confirmed, this was taken from a tweet out of Zero Hedge over the week. This report, what it does do is that it likely foreshadows a lot more research and activity to come from Citigroup and other big banks around crypto. Citi's efforts have been a long time in the making, and we're going to show you. And this is also a part of a broader strategy to get more business from its clients and to respond to client demands. Let's review how Citi got here. So back in August 24th, 2021, and this is what you can see here from this headline, the date on this headline, Citi announced that it was considering offering Bitcoin futures trading to some institutional clients. Again, August 24th, 2021. Their pilot project must have been successful since right after, on November 22nd, 2021, Citi announces that they were planning to hire 100 staffers for their beefed up crypto division. And so this was literally just a few days after their August announcement. So again, the pilot must have gone well. Now, fast forward until this week. So on November 23rd, 2021, they advised they were hiring 100 people for their crypto staff. Now, looking back at last week and the report that we saw, the allegedly leaked report that we saw, this type of market intelligence is typically produced as a result of client demand. Clients would want to better understand the asset class and then engage with the asset class via the products that Citi offers. And so these types of research products are essentially a signal that their clients want to get better informed about the asset class, potentially with hopes to participate in the asset class. Now, expect this trend to continue as Bank of America, Goldman Sachs, and JP Morgan have all been making significant hires and are openly making a push to offer Bitcoin and crypto products to their clients. Again, this article is dated November 23rd, and it talks about Citi joining Bank of America, Goldman Sachs, and JP Morgan in the digital asset space arms race. And so fascinating to see that so many big banks are now actually, some of these plans are materializing into some research products and potentially more ways for their institutional clients to interact with the crypto space. Now, interestingly, the leaked report from Citi was not the only news that it published around crypto last week. It also published a price tag or a projected price tag around the metaverse, saying that it could be worth up to $13 trillion in the future. Now, again, this just signals how important this part of the business it could be for cities and the big banks' future. And the fact that they are becoming so active on the research side signals that they are likely trying to make a big push to sell some of these crypto products to their clients. This, again, they deal with largely a high net worth and institutional client base. So this could indicate more of that type of investor coming into the industry. Now, broadly speaking, outside of this bank activity, let's take a look at quick market fundamentals. For Bitcoin, we see here, let's just take a quick peek at the funding rates for perpetual swaps. And here's perpetual swaps fundings. Let's just pull up the FTX perp. And as we can see, the perps are actually up in the negative, or sorry, they're actually in positive, but they're peering in and out of negative territory. So again, not a lot of conviction on either one direction, but the fact that these are hovering around zero is usually a healthy sign for the market because leverage is not built up on either one side of those perps. Looking at the shape of the futures curve, we also see some positive news here. Mainly the fact that there is now, the curve is in a healthy contango at the moment, which means that the future prices of Bitcoin are higher than the current prices. So again, the May strike is trading at a higher price than April. June is trading higher than May, and so on and so forth. So that leads to a naturally upward sloping curve, which again is a healthy indication going into the trading week. Lastly, let's take a look at the short interest that we had been keeping our eye on over the last few weeks. And again, here we see that the short interest around Bitcoin has basically all but disappeared. The shorts seem to have moved out of the way given the recent squeezes and rallies that we've been seeing. And so given all the positivity that seems to be building around Bitcoin for the week ahead, we're not seeing too much standing in the way in the form of short interest. So again, it's shaping up to be a great week for Bitcoin. We're going to cover a few more things that are up on tap for the week ahead. And as always, we wrap up with what's ahead for the week. Remember, you can check out the blog version of this newsletter where you can catch our commentary on the DeFi space, the S&P 500, gold, and mining. There's some really interesting analysis there on the recent news out of the UK regarding stablecoins for payments and the regulation around that. So be sure to catch it. Again, link is below in the comments section. But for now, let's break down what is up or what is ahead for the week, in addition to the conference and the big banks getting into crypto and the Luna Foundation Guard purchasing Bitcoin. Let's take a look at what else is ahead. So on Wednesday, tomorrow, the market will be keeping a close eye on the Fed minutes from the last meeting, as they'll provide important guidance into monetary policy outlook, as well as some additional details on the Fed's plans to shrink their $9 trillion balance sheet. Fed officials are also scheduled to make appearances throughout the week, giving the public an update around their view, the economy, jobs, and expected inflation. We also get a jobs report out this week. Investors will also continue to keep a close eye on the U.S. Treasury markets, where the U.S. Treasury yield curve essentially has inverted as of last week. And what this means is that a shorter dated yield rises above a longer dated yield. So right now, the two yields that a lot of people pay attention to are the yield on the 2-year note and the yield on the 10-year note. And those are the ones in question right now in terms of that inversion. Inverted yield curves tend to signal recessions, and that is why so many people are zeroed in on this particular phenomenon that we're seeing right now on the curve. The market will also be monitoring oil price volatility. Saudi Arabia has announced that it will be increasing the price of its oil exports. Additionally, the ongoing war in Ukraine has investors on edge as the conflict continues and how this could potentially impact the energy markets. Lastly, the ECB, the European Central Bank, will also publish its minutes from their meeting in March this week. At their last meeting, the ECB announced that it would speed up its plans to withdraw stimulus measures, shocking investors and creating all sorts of reactions in the European markets. Just like in the US, or similar to the US, Eurozone inflation has reached 7.5% for the month of March. Remember, in the US, that's 7.9%. And just like in the US, this has put pressure on the European Central Bank to take the necessary steps to contain that inflation. So with that, we go right into the details of the reports and the economic data that we can expect for the week. Tomorrow at 9:30 a.m. Eastern, we get the Philadelphia Fed President Patrick Harker speaking on the economy. At 2 p.m. tomorrow, we get the FOMC meeting minutes. This could very well move the markets. At 8:30 a.m. Eastern on Thursday, we get initial jobless claims for the U.S. At 9 a.m., we get a speech from the St. Louis Fed President James Bullard on the economy. At 2 p.m., we get another Fed speech from Charles Evans and Raphael Bostic on full employment. And at 3 p.m. Thursday, we get consumer credit. On Friday at 11 a.m. Eastern, Ledn's co-founder and CEO Adam Reeds will be participating on a panel at the Bitcoin 22 Miami conference. And that panel will be talking about Bitcoin as pristine collateral and the Bitcoin mortgage. So be sure to check it out if you're in Miami. If not, we'll look to have it taped and shared around with our clients. And then next Monday, we get the median 1-year and 3-year inflation expectations out of the New York Fed. So interesting data coming out of there, given the rates currently that we're seeing for the short term and how those could overlay on top of a 1 to 3 year inflation expectation in the US. So with that, we've reached the end of today's show. We hope you enjoyed it and learned something new today. If you like the show, we welcome you to thumbs up it, like it, share it with your friends, and subscribe to our channel. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning the best interest rates on your USDC and on your Bitcoin. We also have the best rates on dollar loans backed by your Bitcoin if you need liquidity but don't want to sell it. And our most recent product, the Bitcoin Mortgage, lets you buy a house as big as your stack. And don't forget, B2X lets you take a loan to buy more Bitcoin with the Bitcoin you already own, which is similar to what Michael Saylor just did a few weeks ago. So do check it out, ledn.io. Thank you, everybody. Have a wonderful week, and see you next time.